Hi fools, and welcome to another video from the Motley Fool. I'm Owen Benelak, and today I'm going to talk about ARM Holdings, which is of course the designer and licensor of microchip technology. Now, I like to think of ARM in the same way that you might think about the mafia. If you cast your minds back to that seminal movie, Godfather 2, you might remember the scene where the big mafia don, he's in his white suit, he's got his big hat, he's walking through the street markets of sort of Little Italy in New York 50, 100 years ago, and he's taking $10 here, he's taking $10 there. He doesn't really care if Giuseppe's olive oil importation business goes up, Mario's pizza business goes down. He doesn't mind because he is the don, he can take a bit of everyone's business. Now, ARM's very similar. ARM has licensed its technology to 300 different companies around the world. I think it's actually licensed that technology 900 times, so some of them have played a few times for it. And that technology is in a whole range of smartphones and smart devices such as tablets, for instance. Samsung and Apple, rivals, which one's going to win? ARM's in both. ARM's in a hell of a lot of stuff, basically. So if you buy ARM, you are basically buying into that universe. And they've been doing this for a long time, and it's really coming through in their results now. In their latest results, revenues are up 28%, pre-tax earnings were up, I think, 31%, earnings per share were up 36%. So basically all these licenses that they've kicked out in the past are starting to produce massive royalty streams. And if you look at its general kind of operating metrics, they're extremely strong. Margins are great, return on capital employed is great because they don't actually have to make the chips. They're just making the technology and licensing it out. So their costs aren't ridiculously high. They obviously have to do a fair bit of R&D. But it's a very clean and attractive business to be part of. And a long time ago, you could get these shares for about £1. Now they're nearer £10. I, unfortunately, fools, I didn't buy them because they're always expensive. And they're expensive now. On current year earnings, I think they're on a PE of 50. Now that's actually acceptable because ARM is growing so fast. The PEG ratio, which is a way of saying how much you're paying for growth, is under 1. That's usually seen as an attractive measure of growth, attractive price to pay. But you have to be very confident if you're paying a PE multiple of 50 that that growth is going to continue for years and years to come. ARM's already £12 billion. It's already quite a big company. But more importantly, we'll all remember what happened in The Godfather 2. The young Vito Corleone saw the Don wandering around getting all his money, and he said, "I'll have some of that, please." And he crawled along the rooftop, shot him, took his business. He was the new Don. There's a lot of companies that would like to be the new Don in this space. Even Intel is obviously trying to muscle in. Now, it's not inevitable that ARM will be vanquished. If we think about Intel, for instance, it had 2-3 decades of dominance in the PC business. In fact, it still does. It's just the PC business is going down, the tablet business is going up. Perhaps ARM will be dominant for years to come. It's putting itself into a lot of these smart devices, you know, the infamous smart toaster, the kettle that tells your computer to buy more coffee from Tesco, you know, this advanced world where everything talks to itself, likely to have ARM chips in it. But it might not, or it might be that someone else gets that business. Someone takes out the Don, and you've paid a lot of money for growth that never materializes. So it's a very exciting company to own, brilliant company in terms of how it's run, but you are taking a risk at 50 times earnings, so definitely do your homework and be very confident of the growth that you're buying.